Morning guys, trading the DAX again today, and I've got some analysis of this morning's price action for you on the 5-minute chart. Lots, as usual, lots of double top, double bottom setups on these short time frames, and I'm going to talk you through the setups, and hopefully you can go ahead and get capitalizing on the setups yourself. So short video this one, but enough for you to add to what we've already taught you and start adding to your knowledge. The best way to gain is to learn, and then once you're confident, you get trading. Get a proper education. That's what I'm here for. I'm here to help you to succeed. So my name's Anthony Beardsall. Enjoy the video. It's just after 12 o'clock midday on Tuesday the 2nd of July, and here's the DAX 5 minutes chart in front of us now. And these candlesticks represent the trading from 3 o'clock this morning. The market opens at 7 o'clock, pre-market opens at 7 o'clock, market for real opens at 8 o'clock. And so you can see that those two opens there, the pre-market open and the real open of the market, produce the biggest candlestick bars of the morning, and that's usual. And so you can also see that the first candlestick, the 7 o'clock candlestick, was a big green bar, and the second large opening candlestick, the large candlestick here, is a red bar. So market went up, led traders to believe the market may be going up, and then it reversed back down. This is often the tail, and it traps traders in. So my analysis begins, it's very simple, to be honest with you. Where's the pressure? What's the pressure like in the market? And is it trending? Well, first of all, you have a low here, high here, low here, and the market went past this high here. So you've got a higher high and a higher low. So the market was in an uptrend moving into the pre-market open, and the market was in an uptrend overnight, and then you got another signal of kind of, how do I determine pressure? Well, so I'm looking for highs and lows, and do they coordinate to give me higher highs and higher lows for an uptrend, and lower lows and lower highs for a downtrend? And also, what are the biggest bars on the chart? Well, and what colour are they? And also, what numbers of consecutive red bars, what numbers of consecutive green bars do we have? You had a big run here of 1, 2, 3, 4, 5, 6, 7, 8, 9 red bars. That was starting at 5:45 this morning and ending at 6:30. So that's a signal of intent, isn't it? It's a big thrust down. And the bears are saying, I'm prepared to sell here. I'm prepared to sell at this level here. I'm prepared to sell all the way down here. And so this dotted line here is the pivot level, which can be significant in creating market turns, and not always. It can provide support and resistance, and not always. It's not a consistently reliable indicator for market turns. You should wait to see what happens with the candlesticks at those particular levels. I've also got some EMAs, exponential moving averages, on the chart. There's the 8, the blue line, and the red line is the 20 exponential moving average. So the market pushed up 7 o'clock and made another high. Now, interestingly, so big time frame, this is a higher high and this is a lower low. Okay, no real fight back by the bulls in here at all to create a high, so this is a lower low. And you could even think, well, okay, so that's a high, market came back down, went up again, lower high, and the market moves down. You can see a left shoulder, a head, and a right shoulder in there. head and shoulders pattern on, these are 5-minute candlestick bars, so on a small time frame that's a head and shoulders pattern, and it's also a lower high. This is the lower high, double top, first high, second high, and the market started coming down. So the market comes down a long way, and all of the traders who traded that pre-market, that double top, that head and shoulders top, will have taken profits from that. So the market then fed its way back up. Okay, why does it do that? Well, it does that because the traders who went short in here are taking profits, and also it's reached a pivot level. There's a 2-bar reversal here, good reversal pattern at a pivot level, and the market starts rising. So the market rises up into the exponential moving averages and through them with the 7 o'clock bar, big green bar takes it through, and it fails to make a higher high. Comes down, tries to retest this high here, so it goes up, tries to retest this high, and that's a good candlestick pattern in there. So this, which are the strongest bars on the chart at this stage? You've got this big green bar, but you've got these 9 consecutive red bars. That's like one massive red bar. That's stronger. And this bear move here was stronger than the reply from the bulls, and the bulls reached a lower high. So when they push back up again on a small time frame, market goes below the middle of this 1 high, 2 highs, lower high, double top. That's a trade, and it left a spike there which was above the exponential moving averages. Some really good signals here, and above or into a round number 12,550, and everyone agreed that the market was going to go down at that stage. So you'd got a higher high, a low, lower high on a bigger time scale, and the market went below the middle of that, and that 1, 2 was a double top as well as 1, 2 on a smaller time frame. Lots of these type of patterns, which is why I recommend them. And if you trade them correctly, you should get good probability on the trade, and also your risk and reward is known. These are specific trading patterns discussed in my course, and they're good. They have a good mathematical equation associated with them. Pull back, market goes up, makes a high, pulls back down, tries to make another high back up to the pivot level, fails, and that also is a very small in there, double top, market goes down. So the market comes down. We're now at the 12,500 round number level. It makes a low and a lower low, a lower low, and starts rebounding. So that's no trade in terms of a double bottom, because that's a lower low than that low there, lower than that. And you can see that within these details of the details of these candlesticks here, market pulled up, went straight back down, big thrust down, but failed to consolidate below the 12,500 level. And there are 1, 2, 3, 4 big tails on the candlesticks. There's a good chart pattern in there, and you've got a low, market went up, higher low, there's the middle of the pattern, and everyone went long here. Everybody agreed that it was a long here, and this candlestick is stronger than these two together. And even at this level here, the traders are buying previously and they're buying again, and the market went up, and that was a successful long trade. So head and shoulders tops, double bottoms, head and shoulders bottoms, the rising valleys, pullbacks, trading pullbacks. Once you're able to analyze a chart, you'll see trades all over the place, and there's no need to take random trades. This is the 5 minutes chart, and I've highlighted there at least half a dozen trades within 3 hours, and they were all good probability trades that, once understand how to read the markets, and understand technical analysis, then you can read these patterns and you can take these trades with the confidence of knowing that they have a good probability associated with them of completing successfully. No trading style, no setup has 100% probability, and you will have losing trades, but who cares when 80% of the time you have winning trades? Am I right? You tell me. Leave some comments below. If you've got any questions, please feel free to ask them. My name's Anthony Beardsell, and I've really enjoyed talking you through this analysis this morning. This is the 5 minutes chart. This is the DAX quietening down in a trading range at the moment at lunchtime, and so it's feed up for the day. Do this video and then we're done. Okay guys, hope you enjoyed. Hope you got some good value. Have a great trading week, and I'll catch you on the next video. Bye for now.